Hey, good afternoon, everyone. Shannon Stewart, Shannon Stewart Ministries. Today, I want to talk to you about something extremely interesting. I want to talk to you about being the dumb consumer. That's right, I said it. Being the dumb consumer. And you might say to yourself, wow, that's kind of harsh. How do I know if I'm the dumb consumer or not? Well, that's what I want to talk to you about. Now, many of you know that throughout the course of my career, I currently run an outreach ministry, and I've always, for the last 10 years or so, being involved in ministry, whether that's reaching out to homeless or prisons, jails, youth camps, missions, working with the disenfranchised or the people that are franchised, but the system disenfranchising them. Um, but alongside of that, I've worked in the finance sector, and I really, over the course of my career, learned the power of no information, of having your customers be dumb in a lot of instances. Now, when we really start thinking about it, one thing that stands out to me is the fact that one of the most distrusted entities around are banks. People do not trust banks or financial services institutions. Part of that is attributed to the economic crash and the economic turmoil that I was experienced from 2008 to 2010 or 2011. And the other part of that is this: banks don't let you see what's behind the curtain a lot of times. Now, again, part of my discussion and part of my credibility in being able to talk about this is I worked on that side of the fence. So I don't know what it's like to work for a company that charges 98% interest on a $2,500 loan, and you repay them a rate of 99%, and your monthly payments are $199.55 a month for 45 months. 45 months, that's $9,000 for $2,500 borrowed. The dumb consumer. And people don't pay attention to that. The goal of a bank and a financial services institution is to get you in a position where you make hasty, rash decisions as fast as possible with as limited amount of information and knowledge as possible. That's it. Now I want to talk to you about something. Because when you looked at the title of this, you probably saw my title of The $10,000 Mistake. It was the greatest money I've ever spent. Let me tell you how this occurred. So back years ago, my wife was pregnant with our first child. We were looking for a home. We'd found a home. My wife loved it. She was like, "Yeah, this is the American dream. We're married. We're having a child, buying a home. I found a home. It's great." And it wasn't great. My wife loved the home. I mean, who wouldn't love the home? It was beautiful. It was big, hardwood floors throughout. Just a great place to be. Neighborhood had parks and schools and all of this stuff. How great. And I remember sitting with the person that was in charge of doing the finances, and she presented me the HUD-1. And the HUD-1 is it's kind of like a mortgage statement of closing. It outlines everything that you're going to pay for at time of closing. This is what the house sold for. This is what your down payment is. This is any liens or whatever's on the property. This is what gets paid to the realtors. This is what gets paid to you. This is the net out that goes back to you. This is what your payment will be month over month. That's it. It's almost like I'd been asking for that actually from day one since closing. Like, what are my payments going to be? And when I got the HUD-1, it was like a pit and just an uneasiness in the pit of my stomach as I looked at the bottom line that says what your monthly payment would be. My monthly payment in that instance was approximately 44% of my net take-home pay. Now keep in mind, the bank had approved me for this. Banks are my friends. They know what I can afford. They had all my information. So this has to be right. Right? Wrong. Now keep in mind, federal government, for any loans that are FHA, that's Fannie Mae, Freddie Mac, they mandate that no more than 28% of your overall net income go to the core expenses of housing. But there is a way around that. If your overall debt to income ratio is a bit higher and your credit score is a bit higher, you have a bit of flexibility in that. Now keep in mind, purchasing a home outside of the credit card and the auto finance piece is something that could be viewed in some instances as conditional underwriting, where a person goes through, they look at your overall statement and what you do. They take into account all of your expenses, all of your liabilities. If there's things that are off, you can explain those to them, and then they determine if this is right for you. Banks are my friends. They know right, wrong. So, I had no peace about this transaction. And I remember the day of closing, waking up in the morning, heading out to my job, tying my left shoe. It was 6:17 a.m. and I heard a small, still voice that say, "You don't have any peace in this purchase." And I had no peace in the purchase. I turned and woke my pregnant wife up and said, "Listen, I don't have any peace about us buying this house." And she said, "Great. Call the realtor and tell her we won't buy it." We called the realtor, told her we wouldn't buy it. They kept my $10,000 earnest money deposit. And you might be saying, like, wow, that's a lot of money to swallow. How come you didn't know this before? Greatest $10,000 I ever spent. Because not only has that saved me in future transactions, I've told that story to countless people. Again, remember, I'm a minister. I run an outreach ministry. I spend a lot of time counseling married couples. And remember, 65% of all couples argue about money. 45% of all divorces occur because of money. And I talk to them about that. And I talk to them about the importance of understanding. Guess what? Home ownership is not for everyone. See, by all intents and purposes, we sometimes fall into the trap of believing that the American dream is to go to school, get married, buy a house, have babies. That's how it's supposed to be. That's what it's supposed to be. Who said that? Who said that that was the American dream? And for what Americans? Who are we talking about? That's the dream for who? Is it the dream for a person to go out and purchase a home and have a $5,000 a month mortgage when they only make $6,000 a month? Is that the dream? Don't be a dumb consumer. Investigate things. Figure out what is right for you. It's okay to ask questions. Again, when I look at our communities, particularly the African American and Latino communities, those communities are most financially underserved, and those communities are also the two most prominent communities that are most financially underdeveloped. It's like fitting a square peg in a round hole. Really makes no sense. Investigate things. What's right for you? Know what's right. Start by understanding your financial positions. Visit places. Like a number of the sites on the internet that you can procure and obtain a free credit report. Find out where you stand. I remember being in the lending space and looking at people and spending time with a bunch of scientists and research analysts and finding out that 42% of all Americans have no idea what their financial well-being is. They don't know what their credit report is. Now, keep in mind, what's even more astonishing is the 20% of people that are surveyed that their credit report is and their credit score is actually higher than what they think it is. But they still have no information, no knowledge, no understanding. They'll take a rate higher than they should because they're misinformed. So start questioning things. Those of you, if you're listening to this while I'm speaking, and you're in the process of buying a house, don't make the same mistake I did. Ask for your HUD one up front, immediately, as soon as you're approved. You'll have an idea of what you can afford from there. Secondarily, if you're buying a vehicle, don't go to a car lot and say, buying a vehicle and I want to pay $400 a month because that's what I think I can afford. Hey, guess what, guys? The average car note in the USA is $410 a month. $410 a month is the average car payment in the United States of America. And I talked about this last week. The average American consumer only makes $45,628 a year. That's not even $400 a month. So you're telling me that if you look at that, a person's car payment on average is greater than 10% of their monthly take home. How crazy is that? And in some instances, it's significantly more. Some instances, it's 15%. Because that's actually what it'd be if you look at a $45,000 earn versus, what you take home. Don't be the dumb consumer. Understand what you're doing and question things. Question banks. Have an idea of what you're paying. Look at your mortgage statement. Know what your interest rate is. Know what you're paying to impounds. Know what you're paying to your what you're paying the insurance, and know what you're start questioning things. Inform yourself with information. Go through all of your expenses and see what you can cut back on. Find out. Call your cable company. Challenge them. Hey guys, I'm paying you too much. I'll go somewhere else, and watch them reduce it. Call your credit card companies. Hey guys, I'm paying you too much. See where they're at in regards to reducing it. Don't be the dumb consumer. Guys, that's my time. Listen, stay tuned for the next video. We'll go further in depth in this. Remember, I love you. God loves you. And until next time, keep living in victory.